HDFC Flexi Cap Fund. To what extent this Flexi Cap Fund can help you accumulate wealth, or will this fund is going to be a hindrance to your wealth creation process? Let us analyze. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial decision so that you reach your financial goals faster and smarter. Before we evaluate HDFC Flexi Cap Fund, first let us understand what is this Flexi Cap category. Flexi Cap category can invest in large cap, mid cap, and small cap. There is no restriction on the capitalization. They can choose all the capitalization in whatever the combination. He can give overweight to large cap or mid cap or small cap based on the analysis and outlook. Being an equity fund, minimum 65% needs to be invested in equity, 35% can be invested in fixed income instruments also. Being an equity fund, this fund is suitable for investors who have got a high risk appetite, because in the short term, this fund can deliver negative returns and there will be a lot of ups and volatilities. Only if you have long-term money, that too for 5 to 7 years, then you can consider investing in it. If you've got short-term money or short-term goal, better to avoid this fund. Being an equity fund, this fund is capable of generating long-term capital appreciation. It can give you a decent inflation beating return in the long run, 7 years plus. As we have looked at the Flexi Cap category in detail, can we start HDFC Flexi Cap Fund analysis? What is going to be our method of analysis? First, we are going to analyze the fund in 3 segments. First segment, we will understand the key attributes of the fund. In the second segment, we will analyze the return of this fund from the different perspective, entirely different perspective. From 360-degree perspective, we will analyze. Then in the third segment, we will analyze the risk involved in this fund. What are the different risks and how do we measure that risk? That we will explain. Then after all these 3 segment analysis, what are the key observations of this analysis and what should you do as an investor before you start to invest in this fund? That we will see. Can we move on to the first segment, attributes of the fund? Yes. The minimum investment in this fund is just 5,000 rupees. And if you are starting an SIP, then in that case, the minimum investment is just 500 rupees. This fund is there from 1995. So good amount of track record we have got. So we are able to do an in-depth analysis. The benchmark of this fund is Nifty 500. And it is an open-ended equity fund category. The asset size is 26,511 crores. So one of the high AUM Flexi Cap funds. The portfolio turnover ratio of this fund is 22.54%. This fund is doing moderate churning of the portfolio. This fund is not doing high level of churning. So that way, this fund is strongly believing in long-term investing and buy and hold. This fund is not believing in trend chasing or momentum investing or short-term investing. That way, a fund focusing on long-term investing strategies and the buy and hold strategy is a healthy thing for this particular fund. And the total number of stocks held in this portfolio, this fund is 57 stocks, whereas the category average is just 50. So this fund is slightly over diversified when compared to the category. The large cap exposure in this particular fund is higher, which is 73%, whereas mid cap 9.19%, small cap 4.89%. Though it is a flexi cap fund, this fund has got higher exposure towards large cap. What are the top 10 holdings? SBI, ICICI Bank, Infosys, Reliance Industries, HDFC Bank, ITC, NTPC, Coal India, L&T, and HDFC. These are the top 10 stocks. As I told you, large cap weight fund. Top 10 stocks accounts to 54% of the overall assets under management. That means this fund totally invests in 57 stocks. 54% is invested in top 10 stocks. In the rest of the 46 stocks, 46% of the AUM is invested. That means top 10 stocks has got a higher concentration in the portfolio. The concentration can bring additional risk and also can bring additional return that we have to further analyze and find out. What are all the major sectors in this particular fund? Financial sector, 35% allocation. Energy sector, 14% allocation. Technology sector, 9% allocation. Put together, 59.72%. That is almost 60% is concentrated in the top 3 sectors. So again, here you have got concentration risk. Exit load in this fund is applicable if you are withdrawing only before 1 year. If you are withdrawing after 1 year, there is no exit load. Before 1 year, if you withdraw, there is an exit load of 1%. If you are withdrawing before 1 year and there is a gain, it is short-term capital gain, you need to pay 15% tax. If you are withdrawing after 1 year, then it is long-term capital gain, you need to pay 10% tax. We have understood the key attributes of HDFC Flexi Cap Fund. With that, we can wind up the first segment and we can move on to the second segment, which is return analysis. What is the kind of return this fund has delivered in the past? And we are going to compare this return with different parameters so that you will get more clarity on what kind of return this fund has delivered. First, let us compare the return of this fund with its benchmark, Nifty 500 Total Return Index. In the last 1 year, HDFC Flexi Cap has delivered 9.53, whereas Nifty 500 has delivered 1.93% only. So, sizably by 8%, HDFC Flexi Cap has outperformed in the last 1 year. Whereas in the last 3 years, 13.13 is the return, whereas Nifty 500 return is 14.54, again close to 1.5% underperformance in the index. Again, here last 1 year 8% outperformance is also averaged out in 3 year return. So if you remove last 1 year, right, 2 years before last 1 year, if you take it, in that particular period, this fund should have actually sizably underperformed the benchmark index. That sizable underperformance is like by and large covered by last 1 year better performance. Even then, there is 1.5% lower return compared to the benchmark index. So what it clearly shows is this fund is actually struggling to outperform the respective benchmark index. What is the rank of this fund within this particular Flexi Cap category? In the Flexi Cap category, because of its outperformance in the last 1 year, it has delivered, it has got the rank of 3 out of 60 in the last 1 year category. Whereas in 3 year category, it is just 22nd rank. That means there are 21 other funds which are outperforming in this category. The last 5 years, it is 13th rank. 7th year also 13th rank. Last 10 year also 10th rank. Right? So except for last 1 year, there are other competitors which are doing well in the category. This fund didn't have a very good rank except for last 1 year. Rolling return analysis and important analysis, because generally in the point-to-point return, the recent return, if it is very good, it will get averaged out in the 2nd year, 3rd year return. So it will look like 2nd year, 3rd year is also doing well. If there is a recent underperformance, it will also get averaged out in 2 year, 3 year return. Because of that, it will look like the fund itself is outperforming even in 2nd year, 3rd year category, 2 year and 3 year category. That is why I take rolling return analysis. Rolling return analysis gives like fantabulous data. I ask you to focus on 2 columns which are maximum and minimum. right? In a in the entire history of HDFC Flexi Cap Fund, in one of the best 1 year period, the fund has delivered 154%. Whereas in one of the worst 1 year period, the fund has delivered 53% negative return, minus 53% return. Similarly, in one of the best 3 year category, this fund has delivered 54% positive return and minus 9% in worst 3 year. So in 5 year, best return is 31%, worst is -2. Even in 5 year, this fund has delivered negative return. And in 10 year, the best return is 23% and worst return is 5.76% positive. Right? So even for a 10 year period, fund delivering 5.76%, which is similar to FD and not beating inflation in a worst case scenario, we have to take it with a pinch of salt, right? Because when we are investing in a fund for a longer time frame, we want it to give you inflation beating return. When we did our other reviews, if you check our other earlier review videos, there are funds which has delivered a higher rate of return, right? More than 8%, more than 10% of the return funds have delivered, whereas this fund has failed to deliver such an inflation beating return even for a 10 year worst case situation. Okay, now we will look at the best and worst quarter returns. What kind of best return this fund has delivered? In Q2 of 2014, this fund has delivered 27% return. In Q1 of 2020, this fund has delivered minus 32% return. So in just 90 days, this fund has delivered 27%. This fund also have delivered in a similar 90 days, minus 32%. So what do we infer from here is, this is an equity fund. The road ahead will be bumpy. Ups and downs will be there. Only if you have conviction to stay the course for 7 years, please choose this fund. Otherwise, don't take a decision because in the last 3 months it has delivered 30%, or don't quit this fund because in the last 3 months this fund has delivered 30% negative return. This fund has got the potential to give you both, but in the long run, this fund can give you inflation beating return. When I say long run, 5 to 7 years time frame is the economic cycle. You have to stay the course. Please understand the road ahead is going to be bumpy. If someone could have invested 1 lakh 7 years back in this fund, the present value is 2 lakhs. If someone could have invested an SIP in this fund for 10,000 rupees every month for the last 7 years, the present value is 13 lakhs 65,000. Though the fund has delivered reasonably a good return, both in lump sum and SIP for 7 year category, I would strongly suggest you to focus on doing more of SIP because it will help you get better average out in the long run. And we are in the last part of the return analysis, peer comparison. I have handpicked a few good flexi cap funds. I'm comparing it with HDFC Flexi Cap. How are they doing it in different time frame? In the last 1 year, HDFC Flexi Cap has delivered 9.53. The handpicked best Flexi Cap funds didn't outperform this fund in the last 1 year. However, in the last 3 year category, UTI Flexi Cap and Parak Parik has outperformed this fund. Parak Parik has outperformed this HDFC Flexi Cap fund by close to 8%. In 5 year category, also UTI Flexi Cap and Parak Parik has outperformed. The only positive factor in this last part of return analysis is, compared to its peers, which I have handpicked, HDFC Flexi Cap has got 1.72%. That is the least expense ratio because of its huge asset size. When the asset size grows to the extent of 26,000 crores, obviously the expense ratio will be lower. Fine, we have done a complete 360-degree analysis on the return. Now is the time to focus on risk, which is the third segment. As an investor, you should not over focus on return and chase return. If an investor is focusing on return and chasing return, then there is a high probability at some point in time they'll end up meeting huge risk. So as an investor, you need to focus on risk first, then find ways to manage that risk so that you can end up meeting above average consistent return, right? So we will do an in-depth analysis on the return that will give you a lot more clarity here. According to SEBI's Risko Meter category, HDFC Flexi Cap Fund is a 100% equity fund. So this has got very high risk. This fund is actually suitable for very aggressive investors. Actually, for investors who are willing to accept very high level of risk to maximize their return potential over a long period of time. These are all the very important traditional risk measurement tools, some statistical ratios through which we are going to measure the risk of this fund. Standard deviation of this fund is 24.7. So that clearly says that this fund is highly volatile compared to its category, because category average is 21%. Sharpe ratio and Sortino ratio should be higher than the category, whereas Sharpe and Sortino is lower than the category. So Sharpe ratio lower means the fund has got poor risk adjusted return. That means the fund takes higher risk and delivers lower return compared to the risk they are taking. Sortino ratio lower, that means the fund has got low downside protection. And beta of this fund is 1.05. That implies that the fund is taking equivalent risk to the index, not taking reduced amount of risk. Alpha of this fund is minus 1.96%. Alpha is the benchmark. Alpha is the ratio by which we are measuring the ability of the fund manager to outbeat the index. Whereas in this particular fund, alpha is negative for the last 3 years. That means the fund manager has not beaten the index for the last 3 years. So definitely it is a very important negative observation for this fund. We have measured the risk by using few traditional tools. Now we are going to measure risk by a unique downside volatility tool. This is an advanced risk measurement tool. The traditional risk measurement tools measure volatility as a wholesome volatility. When the market goes up, a fund goes up heavily, right? That is also captured as volatility. When the market goes down, a fund falls heavily, then that volatility is also combined. Both are considered as like one single volatility number. Now, like what we are doing here is I'm differentiating. I'm actually removing the upside volatility. I'm taking into account only the downside volatility. Based on that, I have sorted the funds which are taking highest downside volatility. Top 25% is top quartile, which is high risk. Next 25% is in the upper middle quartile, that is above average risk. Lower middle quartile, that is 51 to 75th ranking, bad quality risk-taking funds. That means they take less than rest of the 50 funds in the 50% of the funds. Then 75th to 100th push, 75% to 100% is what bottom quartile. Funds in bottom quartile are highly preferred funds because they have very less bad quality. Funds in the top quartile are least preferred funds because they have got high bad volatility, high downside volatility. So this fund in the last 3 year, 5 year, 10 year has been in the bottom quartile. However, in the 15-year category, this fund is in the upper middle quartile. And being in last 3 year, 5 year, 10-year category in the bottom quartile, this fund has got a good amount of ability to reduce the downside risk according to this downside volatility. Next important ratio which we will be looking at is capture ratio. Again, this is a unique advanced tool which we use to measure the risk. When the market goes up, how much of that upward market trend this fund is capturing? When the market goes down, how much of that downward trend this particular fund is capturing? A fund should capture more of the upward trend and less of the downward trend. So now you look at it. The up market capture ratio in the last 1 year is 95 and the down market capture ratio is 56 in the last 1 year. So last 1 year is very good year for this fund because the total capture ratio is 1.69, which is definitely very good. However, the last 3 years, 5 years and 10 years category, if you look at it, this fund has went down higher than the upside capture. That means the fund captures only the upside equivalent to the index or slightly more than the index, but whereas when it falls heavily compared to the index. So they capture upward trend reasonably well, but they fail to protect the downward market. This is a major challenge with this fund. Even this particular slide's numbers correlates with the data which we have seen. Last 1 year very good return, last 1 year very good rank in the category, but in 3 year, 5 year, 10 year category they didn't score well. In fact, 3 year, 5 year, 10 year return is also not beating the index. So only in the last 1 year their downside protection is good. They are able to capture less of the down market. Rest of the time frames they have fallen higher than the index. So not able to protect the downfall in the fund is the major challenge of this fund. This is an important negative observation on this fund. Okay, we have also completed analyzing the risk involved in this fund from different perspectives. We used a few traditional tools and also few unique advanced tools we have used. Okay, we have completed all the 3 segments. What are all some important observation when we did this 3 segment analysis? Though it is a flexi cap fund, a huge money is invested in large cap. So being a large cap overweight fund, if the mid cap and small cap rally happens, this fund can considerably underperform the index because they are overweight on large cap. This fund is actually struggling to outperform the index. It is an important negative observation. And there are other flexi cap funds which has done reasonably well compared to HDFC Flexi Cap Fund. Again, it is an important negative observation. Why someone should compellingly invest in HDFC Flexi Cap Fund? There is no clear answer. Okay, if you are deciding to invest in this fund, what are all the key things you have to pay attention to? Okay, because it is an equity fund, there will be volatility, there will be ups and downs. Make sure you are staying in the fund for 5 years time frame. This fund can deliver a negative return, no return, low return, average return, above average return in 5 to 7 years cycle. So stay and sail through all these different phases, and end of 7 years there is a possibility you may get inflation beating return. Only if you have long-term money for 5 to 7 years, please select this fund. Otherwise, you can avoid this fund if you have got only short-term goal or short-term money. Also, I would strongly urge you to have a discussion with your financial planner on a couple of points. One, your investment objective. Your financial planner could have created you a financial roadmap. Where are you financially? Where do you need to go over a period of time, right? You want to buy a property, kids education, kids wedding, your retirement to life expectancy, regular inflation adjusted income, right? In this roadmap, to achieve all these milestones, what kind of cash flow you already have and what kind of portfolio you already have, whether this particular fund will help you achieve these financial milestones, financial goals, investment objectives, your financial planner will be able to check and tell you. Also, your financial planner could have done a risk profiling to you. So he knows your risk appetite and the risk taking capacity. Based on that, he will check again and tell you whether this fund is suitable to you or not. And third important thing you have to ask with your financial planner is, because you are adding this fund to your portfolio, whether this fund is going to bring an overlap or additional diversification. Because you already have a set of mutual funds already. You may already have a set of direct stocks already. Because you are adding this fund, this fund's underlying stock portfolio is going to overlap with the existing portfolio of yours or going to bring additional diversification. If it is going to bring overlap or additional diversification, which is actually beneficial to you, he will be able to check. And also he will be able to check based on other parameters what kind of allocation or weightage should be given to this fund. So please have a discussion with him. Also, as a financial planner, he will also look up few qualitative parameters. In this entire video, we have done analysis only on the quantitative parameters of this fund. There are other qualitative parameters like the ability of the mutual fund company to retain the fund manager, and whether the company has got institutionalized investment process or the fund manager can create his own investment process and do it. And as a fund house, do they stick to their investment strategy even during testing and tempting times? So these kind of qualitative parameters he will be able to check, and based on that he will be able to tell you whether to invest in this fund or not. Hope this 360-degree analysis on HDFC Flexi Cap Fund helps you. If you have any further questions, please ask in the comment section. We will try to answer, or we will try to make a video on that. If you have any questions on investing in these kind of funds or any other investment options or achieving your financial goals, feel free to book a free appointment with our certified financial planner. To book a free appointment with our certified financial planner, I have given a link below this video. Feel free to click that link and book your slot. We have given one more link in the description of this video. It is for participating in our webinars. We regularly organize insightful investment webinars with eminent investment experts. They share their industry experience of 15-20 years, and they reveal successful, proven, tested, tried investment strategies and wealth creation techniques they will share. You can quickly learn and immediately apply those strategies in your portfolio and create long-term wealth. So please book your seat for the upcoming webinar in the registration link given below this video. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.